Have you ever wondered if that tiny, almost insignificant online purchase is even worth processing for the company you're buying from? You know, those microtransactions, a digital sticker for 99 cents, or perhaps a single article access for $1. It brings up a crucial question for any business operating online. What's the minimum amount you can actually charge through a payment gateway like Stripe? Today, we're pulling back the curtain on one of the most popular and developer-friendly payment platforms out there, Stripe. We're going to dive deep into the concept of minimum payment amounts, why they exist, how they're calculated, and what it all means for your business, whether you're selling digital goods, offering subscriptions, or running a full-blown e-commerce store. So, let's start with a seemingly simple answer. What is the minimum payment amount for Stripe? The official word from Stripe is that the minimum amount for a charge is 50 cents USD, or its equivalent in the charge currency. This is a hard and fast rule set in stone across the globe for every single currency, but it's a very good baseline to understand. If you're primarily dealing in US dollars, you should generally expect that any transaction below 50 cents might run into issues. But why 50 cents? Why not a penny? Or 5 cents? This is where the intricacies of payment processing come into play. Every transaction, regardless of its size, incurs certain costs. These costs aren't just arbitrary. They cover a lot of behind-the-scenes work. Think about it. When you swipe your card or click Pay Now online, there's a whole network of banks, card associations like Visa and MasterCard, and payment processors like Stripe, all communicating in milliseconds to ensure that money moves from your account to the merchants. Each player in that chain has a cost associated with their part of the process. Let's break down some of the key components that contribute to these costs. Firstly, you have interchange fees. These are fees paid by the merchant's bank, acquiring bank, to the cardholder's bank, issuing bank, when a transaction occurs. These fees are set by the card networks, Visa, MasterCard, American Express, etc., and can vary based on card type, credit, debit, rewards, transaction type, online, in person, and even the industry of the merchant. They are a significant portion of the overall transaction cost. Secondly, there are assessment fees. These are fees charged by the card networks themselves to the acquiring bank for the use of their networks. Think of it as a toll for using the payment highway. Thirdly, you have the payment processor's markup. This is where Stripe comes in. Stripe adds its own fee on top of the interchange and assessment fees to cover its services, providing the technology, security, fraud prevention, and customer support. For many standard online transactions, Stripe's widely known fee structure is 2.9% plus 30 cents per successful charge for domestic cards. Now, let's put this into perspective with our minimum payment amount. If Stripe charges 2.9% plus 30 cents, imagine a transaction of, say, 10 cents. A 2.9% fee on 10 cents is a tiny fraction of a cent, but that fixed 30 cents fee? That becomes a massive proportion of your revenue. If you charge 10 cents and Stripe takes 30 cents, you're actually losing money on every single one of those transactions. It's not sustainable for your business, and it's certainly not profitable for Stripe. The minimum payment amount is essentially a way to ensure that the fixed component of the processing fee doesn't overwhelm the transaction value, leading to a net loss to the merchant or Stripe. This is why, for example, a 50-cent transaction in USD makes more sense. At 2.9% plus 30 cents, Stripe would take approximately $0.0145 plus 30 cents equals $0.3145. This still leaves you with a very small margin, but at least it's not a loss. It's also important to note that the minimum payment amount can vary by currency. While 50 cents USD is a common benchmark, other currencies have their own equivalents. For instance, you might see a minimum of 30 pence or 50 cents. Stripe publishes a comprehensive list of supported currencies and their respective minimum charge amounts on their documentation. This is crucial if you're operating internationally, as you'll need to be aware of the minimums for each currency you accept. What about micropayments? This is a term often thrown around for very small transactions, often less than $1. And traditionally, payment processors like Stripe have struggled to make micropayments truly efficient due to those fixed transaction fees. If your business model relies on charging very small amounts, Say, for accessing a single article on a news site or a tiny in-app purchase, you might be thinking, this 50 cents minimum is a problem. One common workaround for businesses dealing with micropayments, if a specific low-cost plan isn't feasible, is batching transactions. Instead of charging a customer 10 cents 5 times, you might accumulate those charges and process a single 50-cent transaction when they hit a certain threshold. This reduces the number of individual transactions, and thus the number of times you incur that fixed per transaction fee. However, this strategy introduces its own complexities in terms of user experience and accounting. Another key consideration is fraud prevention. Even a small transaction can be an attempt at fraud. Stripe invests heavily in its fraud detection systems, like Stripe Radar, which analyze billions of data points to identify and block suspicious activity. These systems incur costs, and for very small transactions, the cost of fraud prevention might exceed the potential revenue if the minimum isn't high enough to cover it. It's also worth discussing refunds and disputes. When a customer requests a refund or disputes a chargeback, the merchant often still incurs fees, even if the original transaction fee isn't returned by Stripe. A dispute, for example, can incur a significant fee, typically around $15 USD. If you're dealing with transactions below the 50 cents minimum, and one of those leads to a dispute, the financial hit can be substantial. The minimum payment amount helps mitigate some of this risk. So, for businesses considering using Stripe, understanding this minimum payment threshold is absolutely critical for your financial planning. Here's a quick checklist of what to consider. Your product or service pricing, currency considerations, volume of transactions, user experience versus fees, alternative payment methods. Ultimately, Stripe's minimum payment amount is a reflection of the underlying economics of digital payment processing. It's a mechanism to ensure that the fundamental costs of moving money between accounts are covered, preventing losses for both the payment processor and, ultimately, the merchant. It encourages businesses to structure their pricing in a way that aligns with the realities of the financial infrastructure. Stripe's transparency in outlining these minimums and fees in their documentation is a huge advantage. It allows businesses to plan and build their payment integrations with a clear understanding of the financial implications. So, before you launch that new product or service with a price tag of a few pennies, remember the Stripe minimum and the comprehensive system of fees it helps to safeguard. It's not just about what you charge, but what it costs to charge it. With that said, thanks for watching, and until next time.